Good afternoon, traders, or it might be morning where you are. But Happy New Year. Today is January 5th. We're going to give you a live example of how to use the hourly data service during the New York session. These are some live trades that were made today. And once you continue to practice, then if you combine the knowledge of the supply and demand, support and resistance areas, such as this one right here. This is now a support area and a monthly supply and demand area. And as you can see, the price, once the price got here in the New York session, the price actually reversed uh, over 1,000 pips. All right. So what we'll do is we will go to the how you use this in the live trading session. Is well, first you want to go to the guide. Remember to review the guide, and then do everything that the guide says to do, and then click the spreadsheet. If you go to the Google page, you'll look at the playlist that impact trading services. Click on the first link, and then we'll put the link to the spreadsheet in all of these videos. Show more, and you'll need to cut and paste these links into your browser or hover over them and press go to, and then you'll be able to pull up the spreadsheet from the Google website, from the YouTube website, Impact Trading Services YouTube website. All right, back to the live example. All right, what we do is we're gonna see the trends for the New York session over the last week or the last 3 to 4 days. All right, in January, today, the New York session has moved. We'll pull up the spreadsheet, and this is the data for January New York session. So we see 1300 for January 3rd has moved 600 pips. 1300 hour for January 4th moved 1000 pips. So if we know this 1300 hour has moved 600 and roughly 1000, then we can go to our chart, and this is today, so this would be real time. So before the session began, we pulled up the spreadsheet, and we wanted to see the last couple of days. And then we can also pull up December, and in December, what we saw the last week of December was 1300, 500, 500, 700, 1000. So we have an average. There's some low numbers here, but we have an average. I would not expect to see right now 1300 hour move less than 500 pips. So what does that do for us during the live trading day? What we'll do is we'll go over to the 1300 hour, and we know the direction is down based on the daily move. So again, once we combine all of this data with our range trading, then you'll be a very profitable trader because you'll know what to expect during the trading day. So this day has went 3,000 pips. Yesterday went almost 3,000. The day before went 2,600. This day right here went 35. So we know around 3,000 is the high end for a whole daily move. So how does the hourly data help us to make a great trade decision during the hours of 1300 and 2000? All right, let's go back to the charts. So we pull up the data. We know the 1300, 1400, 1500 hour has gone roughly 1,000 pips. So now what we'll do is we'll go to the 1 hour during the New York session, and then we'll say, all right, this trade has went 1,500 pips. So we would expect a reversal in the next hour, and that's exactly what the market did. Now this would be a good trade right here because this is in a monthly, weekly supply and demand level. So on the 1400 hour, you could actually trade long here and put a stop loss. We'll use red for a stop loss. You could trade long here on the 1400 hour with a stop loss right below the reversal point, and then you could have a 500 pip profit target. And that's exactly what we did this morning. We actually placed this trade, and this was a winning trade this morning. So we enter on the 5 and the 3, the 15.53, and we're going to do the 15.53 minute practice for you all also. But if you look today during the trading day, the 1300 hour moved roughly 1,000, got here to a supply demand area that's 1,700 pips from the 1300 hour. Now that's long, so we would expect a reversal. So what we would do is at this supply and demand area, and then we'll also teach you on the 0, 0, and 5 zeros, but everything lined up for us to go long here. So we placed a long trade, and then we were in profit. Now, however you manage this trade, this is a great winning trade. A great winning trade. We were in profit over 600 pips. Now, however you do your money management, you can pull up your stops here. You can place the trade, and you can say the hour 1400. Let's go back to the data. So what are we going to expect for the hour 1400? 1400 within the last couple of weeks went 500, 1000, over 1000, over 500. Today, over 500. Now let's go to the December data. The hour 1400, 700, 800, 500, 700, 400 low, 1000, 400, 1000. So today, what we would expect the 1400 hour to do is go at least 500 based on the technical data that we've received. So we could enter here, and then we could actually place a profit target at 400 or 500. If you place the profit target at anywhere from 400 to 600, then you had a winning trade. Now look what this did again. This was a valid supply and demand support resistance level. It tested, went up 400, tested this area again, and actually went up another 400. So depending on the style of trader that you are, you can actually place a profitable trade once the trade enters into your area. And we're going to train on area trading, supply and demand, support and resistance training. But we just want you to see the power of knowing how to use the hourly volatility data during the New York session. All right, so the price came down, entered the supply and demand area. We expected the price to reverse after the 1300 hour moved roughly 1,000 pips. Now, as we continue on 1500, let's go to 1500. Now, price continued on down. Let's go on the 1 hour. Move drawings. All right, so we just studied the hourly data for the 1300, 1400 hour. We know based on daily moves, the 1500 hour should give us a great reversal point. Why do we know this? And this is how you combine the data with the daily range. This day has already moved at this point at 1400. This day has already moved 2,700 pips. And then we will review the daily range and teach you how to combine the daily range so that you can make profitable trades during the New York session. So now at the 1500 hour, the 1500 hour has moved. And again, you could actually trade this down if you wanted to. If that's your trading style to trade with the trend, then you can actually trade 1500 down into the support and resistance area. The way that we used this 1500 today was to say we believe that we actually have a reversal in price where we can place a trade once our trades enter into an area. So we trade once trade enters into an area. And this area that we decided to trade on today was a supply and demand support and resistance area. We color code this. This is a monthly. We use this color for monthly, and we use this color for monthly. How do we know this is a monthly supply and demand support and resistance area? We go to the monthly chart, we scroll in, and each one of these open, close, high, lows, and one of these dots on this chart is a supply and demand, a monthly supply and demand support and resistance area where price usually reverses. And that's proven technical data. So now we went to the monthly chart and we mapped out the supply and demand support and resistance area before price got there. And we'll show you how we did that. So before price got there, we put this line on the chart and we put that line on the chart. So we know that is now a support and resistance area and a supply and demand area where we would expect price to move in the opposite direction to fill orders. So there's market orders from institutions in these locations. All right, let's go back to the hourly data. All right, and then you can fine tune the lines. So we know we are in a monthly, weekly, daily supply and demand support and resistance area. So we would expect the price to actually reverse. All right, so now let's look at the 1500, 1600 hour. So once the 1500 hour, we'll go to our spreadsheet. 1500 on the 4th moved almost 1,000 pips. 1500 on the 1st moved 1,000 pips. Let's see what it did in December. December 30th, 1500, 500, 500, 700, 1500, 2500. Now there may be some news events that move the market, but the supply and demand of the support and resistance area still actually takes that into account. So you can actually continue to trade with the data, and you have all of your information together and make positive trades. So today we have on the January data 1500 moving roughly 900. So how do we use that today for our trading decisions? You can trade down. You could have placed a trade with the trend, but you would expect once the hour has gotten close to 1,000 and entering a supply and demand area, you would expect the hour to reverse, because we haven't seen 1500 go past 1500 every single day. So once we're nearing 1,000, we would expect the 1500 hour to start reversing. Now, when you combine that data with the daily move, we have a daily move of, at that point, 3,000 pips. So if we look at the previous days, that's at the high end of a daily move. So we're coming into a high end of the daily move, 3,000. 3,000, 3,000, 2,800, 3,000, 2,600, 1,500, 1,500. That's 3,500. 3,500. So we see gold, the top daily move is roughly 3,500, possibly 4,000. If there's a news event, then you may get a larger day than that. But this trend, these larger days are 3,500 pips. Today we're moving into a 3,500 into the 3,000 pip range. But what do we see here? We see a supply and demand, a support resistance area right here, and that's monthly supply and demand. And then now when you combine that information on the chart with knowing that gold, the 1500 hour, has already moved 1,000, then you can safely place a trade in this area with a tight stop loss. Once you start seeing this reversal, so you can place a trade long here and hold this long trade for the rest of the day, and then the trade has moved in your favor for 1,000 pips. And then it's up to you on how you're going to manage the trade. Now again, having this data with you, so we would place a trade in this area right here, And then let's use this one for a stop loss in this area. So you can place your tight stop losses beneath this support resistance area right there, and then make sure you have good risk management. We use roughly 1.52% per trade of the account, and then we're also going to be teaching risk management classes. But that's a live trade, so that's how you use the data today for making live trades. And then what should our profit target be? Let's look at the 1600 hour and see our expectations. This trade moved 1,200 in your favor. So 1600, 1700, we place a long trade here. That's a 1,000 pip trade. So you can place your profit targets anywhere from this area all the way up 400, 500 pips, so that if you have a daily goal that you want to meet, then you can meet the daily goal on one trade. If you didn't place this trade short here, then all you need is one trade that moves 1,000 pips, and you have great money management. Now these trades happen every day, depending on your style. This is an intraday trading style. So again, using this data, what would we expect here for the 1600 hour? Well, let's see. 1600 today moved in our favor, 600 pips. Let's go to the data. On Monday, 600. On Tuesday, well, the third, the fourth, moved 400. And then let's see what the 1600 hour did in December. 1600, 400, 400, 500, 700. On the low end, 300, 250, 300, 400, 500, 300. That's on the low end. We've got some 500s. That's 1,000. 1,000, 400, 600, 400, 700, 1,000, 600. So we know that the 1600 hour historically over the last month is trending anywhere low end 250, high end 1,000, but we have a lot of 700s, 400s, 600s, 800, 1,000, 400, 700 for the 1600 hour. So now what we would do is we would expect this hour to move on the low end. That's 200 pips for you. On the high end, that's 1,000, and then the price continue to move up into a supply and demand area, and then you have 1,000 pip move. When you do this on a daily basis, combining what you know about the market, technical analysis does not lie. Now, the reason why technical analysis does not lie is because there are orders in these areas every single day. This is a known supply and demand order. The orders are already waiting there. So if we do a back test for today, for the gold data, then we know this. These orders are already there from previous days. There are institutional orders from this supply and demand area. Now hourly we use the daily blue. All right, so we know this is a monthly supply and demand area before we get there. And what we do is, well, we want to map that out before it gets there during the day. So if we see price moving down during the day, we want to say this is a monthly supply and demand area. So we know that. We know that when price gets in this area, we want to start looking for price to reverse. All right, so now that's drawn on the chart. Before the trading session happens, these areas are already drawn. So we know once price gets to these areas, we'll start looking at the 0 zeros to 5 zeros, and then planning our trades once we see reversals. All right, price went past this one. We can remove that one. And now price is getting to another area. Price reversed here in this area, and then price reversed here once we got to that area. And it's that easy. You continue to practice, you'll see this day in and day out. Now all you needed to do was make 1 to 2 trades this trading session. You could have traded this with the trend here, 1300 with the daily trend here. The daily trend was down. And then once the day got past 300, 2700 to 3000, then you would start looking for the reversals at other supply and demand areas. You combine that data with your hourly data, then you're going to be a mighty profitable trader, consistently profitable on a daily basis. Once you start practicing all of this training, these techniques, then you'll know what to expect during each trading day. You combine that with risk management, and then you're a profitable trader. So again, this is how to use the hourly volatility Google. We'll make some other videos for the rest of this month. We have examples for you. Go to the YouTube page and go to the playlist. You'll see the IMTS hourly volatility guide. Cut and paste these into your window. So you can hover over it, and then you can click that, and that'll take you to the spreadsheet. So it's a public spreadsheet for you to use. That's the December spreadsheet is free. Now as we continue to grow, we're going to offer the updated spreadsheets for $30 a month. But right now, go ahead and access these spreadsheets, and then when you see the power in the trading style, we want you to join our trading community as we continue to build our trading community and build profitable traders. All right, see you guys in the next video. Now remember how to use this data. What are you looking for? You're looking for trends in the data during the New York trading session, trends in the data for the day, the week, and the month. Now once we combine the daily range, the weekly range, the New York session range, you'll be able to see the trends easier as you continue to practice. So what do the trends allow you to do? You can plan your entries at supply and demand areas. Again, once price comes down into a supply and demand, a support and resistance area, as it did here, there are orders already there. The market will reverse. So this market came down and reversed 600 pips. The market came down to fill more orders and reversed 1,000 pips. Now that happens on the daily basis. We'll make another video so you guys can see the power of knowing your data. Again, plan your entries, plan your stop loss, plan your trade per value, your pip value. That's trade management. And then plan your profit targets based on expected low end and high end of the New York session moves. Alrighty, Impact Trading Services, building consistently profitable traders. See you guys in the next video.